Hello and welcome to Watson's Weekly. This is a quick roundup of what I think are the most important and interesting economic and commercial events of the week just gone. I'll be talking about more tariff stuff, this time related to the EU, vehicle manufacturers and farmers, as well as the big news this week from the tech sector and UK retailers, including Tesco's announcement of a new discount brand. The US and EU made tentative steps towards playing nice this week, with US President Donald Trump and European Commission President Jean-Claude Juncker talking trade. It's early days yet, but at least they're at the negotiating table. Other than that, car manufacturers Ford, GM and Fiat Chrysler joined motorbike manufacturer Harley-Davidson in warning about future repercussions of trade tariffs. Trump acknowledged the plight of US farmers this week, as he pledged $12 billion to farmers affected by Chinese tariffs that were put in place in response to his own. Ones involved in the production of soybeans, sorghum, cotton, corn, wheat and pork were targeted specifically. There was a whole load of news in the tech world this week, moving on, as Google's parent company Alphabet swept aside concerns about the massive fine imposed on it last week by unveiling profits that were almost 22% better than consensus forecasts. This was mainly due to particularly strong advertising sales. Facebook had a big news week as it started off with the announcement it was buying a ton of office space in London and a new innovation hub in China, but then it all went down the toilet towards the end of the week as it disappointed investors with weaker than expected user growth numbers and higher costs related to complying with new regulation and security requirements. A 20% drop in the share price in one day was quite something, but I think this company's got a lot of growth coming, and if it somehow manages to crack China, its value could be even more stratospheric. Tesla got caught out at the beginning of this week as Wall Street Journal got hold of a letter asking one supplier to drop its prices retrospectively and give Tesla money to help its profitability. Investors sold off on the news. This is a rather unusual way of raising money, and some investors thought this smacked of desperation, or even an early warning that Tesla would come back yet again to ask investors for even more money in the near future. The week ended with chip manufacturing giant Qualcomm walking away from its proposed acquisition of Dutch chip maker NXP. This happened because Chinese authorities blocked the move despite giving assurances only a few months ago that it would all go ahead as planned. It goes to show that there are many ways for the Chinese to punish outsiders other than with tariffs. This latest move will also put the mockers on tech consolidation for the meantime, in my opinion anyway, as potential candidates might be more inclined to wait whilst the US and Chinese parties sort out their trade differences. Elsewhere, there was quite a lot of news flow this week on UK retail. A survey by the British Retail Consortium showed that almost 20% of retailers are expecting more job losses in this sector over the next few months after a strong recent performance related to the heatwave and England's progress at the World Cup. This is a bit of a shocker because the retail sector is the UK's biggest employer and it has already lost 3% of its employees over the last 3 months, with redundancies being at triple the level they were at this time last year. Then there was news that Tesco will be unveiling a new discount format tentatively named Jack's in September. Although it's good Tesco is trying to take the fight back to the likes of Aldi and Lidl, I personally think this is the wrong way to go about it. I think that a new format will just cost a load of money and take up a load of time and creative energy. The fact that there are impatient Tesco shareholders in the background will probably make it even harder for Jack's to get off the ground. I hope I'm wrong and that it works, but I just think it's going to be a money pit. I hope you found this roundup interesting. I publish a daily note on watsonsdaily.com which gives you more detail on what I've just said on a daily basis. If you want to get access to this as well as my weekly, monthly and annual publications that will help to turbo boost your commercial awareness, don't be shy. Please subscribe. A subscription will cost you less than a double espresso per month. Thanks for watching. Watson out.